Okay, so learning objective 4 is the heavy part of this chapter because what we're going to be doing is we're going to be preparing another trial balance, but we do the trial balance after the adjustments have been done. Remember, learning objective 2 and 3, we were doing all types of adjustments. So now that we've done all those adjustments, it's time to make sure that all of our accounts are balanced, right? And so this is going to be, we call it the adjusted trial balance. The word adjusted in front of that means we've done it after the adjustment process. So look what's happened. This is Sierra Corporation's adjusted trial balance. And look what's happened here. You've noticed here that there are a number of accounts that are in red. The numbers are in red. And there are many accounts in which the numbers are still in black here. Well, the numbers that are the accounts that have numbers that are still with the black print are accounts that have not been affected by the adjustment process. Okay. But all the accounts that their account numbers are in red here went through that adjustment process in learning objective 2 and 3. So you can be able to figure it out simply by looking at what account's affected and knowing the adjusted entry. So the very first account you see with the balance changed is accounts receivable. Well, what adjusting entry affected accounts receivable? As you know, Adam and I were just talking about that, right? It's the accrued revenue. Accrued revenue means we debit the accounts receivable and we credit service revenue. So service revenue is also in red because this was part of the adjustment process. There was only 7 adjustments we went through, and you need to know all 7. Okay. So you know one of them already, debit accounts receivable, credit service revenue. That's an accrued revenue, learning objective 3. Look at the next account that had a red number, which means the number changed after the adjustment process. Supplies balance is now $1,000 debit balance. Well, why? Well, because from learning objective 2, you know we adjusted supplies. How? Well, we had a supplies expense debit and a supplies credit that lowered the balance of supplies and increased our supplies expense. So notice supplies expense is also in red, the number, because it went through the adjustment process. That's a prepaid expense. Learning objective 2, we adjust supplies. The next one is prepaid insurance. Prepaid insurance is also in red here because prepaid insurance also went through an adjustment. What did we do? Well, we had an insurance expense, right? We debited insurance expense, we credited prepaid insurance. And so those 2 accounts were affected by the adjustment process, which means their balances changed. That's why they're in red. Okay. That's also a prepaid expense, learning objective 2. Right. The next account you see in red here is the accumulated depreciation account. Well, what happened here? Well, you know, this is also a prepaid expense. We had a depreciation expense for $40, and we also affected accumulated depreciation on the equipment for $40. So those 2 accounts were affected in the adjustment process, and those account balances have changed afterwards, which is why we do this. You look down a little bit more, you see interest payable. Interest payable has a red number because it was also gone through the adjustment process. This was in learning objective 3, right? An accrued expense. We can expense interest on loans, although we're not going to be paying that interest until later. So we debited interest expense, we credited interest payable. Yes, yes. That's learning objective 3. This is the other one we were talking about, Adam and I. We unearned service revenue, you see, is also affected. The account balance is now $800. It's in red. How is that affected? Well, that's a deferred revenue. Learning objective 2, We debited unearned service revenue. We credited service revenue. So again, those accounts are part of the adjustment process, and that's why those balances are affected and are colored red. The salaries and wages payable account is affected. It's changed to red. Why? Well, because we had adjustments to salaries and wages expense. Salaries and wages expense, debit, salary wages payable credit was an accrued expense. So after all of those adjusting entries, remember the path that they take, right? Anything you write into the journal gets posted in the ledger. If it's in the ledger, that means the balances have changed. So we do a trial balance to make sure the ledger is balanced, right? Meaning the accounts with the debit balances are listed in the first column. The accounts that have credit balances are listed here, and the debit side balances need to equal the credit side balances even after the adjustment process is done. And this is the adjusted trial balance. Okay. It's very important that you understand where all these numbers came from. The reason these are in red, they're directly related to the adjusting entries that you did in learning objective 2 and 3. All these accounts are affected because all these accounts were used in the adjustment process. The good news is once we actually have the adjusted trial balance, we're basically done with our double checking, which means that now we can actually go to prepare the financial statements. And remember, the most important one we start with, the income statement where the revenues and expenses are listed. So this is our starting point always. After we're done with the income statement, we'll move on to the remaining statements. But the income statement is critical. So here is the income statement for the month ending October 31st. Okay. As you see here, where did these numbers come from? So when we say we have service revenue, where does this number come from? It comes from the balance in the ledger, which we just put on the adjusted trial balance. So the service revenue, $10,600, is what we put here on the income statement. That's where the number comes from. It comes from the ledger, or in this case, the adjusted trial balance, which all these come from the ledger. So either way. The expenses are listed right. They're just basically taken right from here. All these expenses are sort of lifted up and put here on the income statement. Total expenses are listed on the far right column with the total revenue. The difference is our profit. We call it net income, right? Net income is the same as profit. Net income is the same as earnings. So they're all the same. But this would be our final income statement for the period because we've already done all those adjusting entries. So we can have very good faith that these numbers are pretty rock solid. Okay. Because we did all those adjustments, we know we have all the revenue there. Because we did all those adjustments, we know we have all the expenses accounted for this month. So we can feel very, very good that this is indeed our profit for the month of October. So that's the very first statement that we do. And it's, again, probably one of the most important ones that we have to get that right. We definitely have to get that right. From the income statement, right, goes the retained earnings statement. Again, it's for the retained earnings statement measures the exact same period. Remember, both the income statement and the retained earnings statement are subject to the periodicity assumption because they measure a period of time, in this case, the month. So Sierra Corporation is a brand new corporation that just started in October. The beginning balance for retained earnings is 0. Okay, that's because it just started. But you know how a retained earnings statement works. We add the net income we just calculated. We subtract out any dividends. How do we find out the dividends? Go back to that adjusted trial balance. It has all the numbers you need. here's the $500 in dividends that were taken. So we take away the $500 in dividends from the net income, and the remaining balance is the amount of profit retained earnings, the end of October. Retained earnings statements are always going to look like this. They're always going to start with a beginning balance, which we'll see here. And then we add the profit, which we calculated on the income statement, and subtract the dividends, which we will get from this trial balance as well. So what happens to this? Who owns the retained earnings? Well, the owners do. So these will be transferred over to the balance sheet. Okay. We still use the adjusted trial balance for all of our final numbers because this is we've already adjusted all this. So we have faith that all of these numbers are accurate. So now we can report them. The balance sheet, as you know, is not subject to periodicity because it only tells you what the assets, liabilities, and equity is as of a particular day, right? It's a selfie financial statement. As you know, it starts with assets, and assets are listed in the order that they would normally be on a classified, right? Your current assets are listed first, and then in this case, your property, plant, and equipment. There's not a lot of assets here. Remember, the accumulated depreciation account is an asset account with an opposite balance. So it's called a contra asset. That's why we subtract it out of the equipment account to get the book value of the equipment. But all these numbers that are used on the balance sheet come right from here. Exact. All these numbers are exactly from here. That's how we do a balance sheet, really, in real life. Total assets, 21,910. So the other side of the balance sheet has liabilities and stockholders' equity. Liabilities are always listed first. These are all of our liabilities, and they just happen to be listed right here, all the way down to payable. Sorry, the way to payable. So these numbers are simply lifted up and put here. Total liabilities, 9,550. Stockholders' equity is next. You know what the common stock account is. 10,000 is here. Retained earnings, we don't use this one because we already did a retained earnings statement. We use that. So retained earnings is 2360 because we got that from the retained earnings statement. That's the most current retained earnings. This is not the most current retained earnings, but the one that comes from the retained earnings statement is. So that's the balance we use, 12,630, sorry, 360 in equity, plus your liabilities of 9,550 gives you total 21,910. It's the exact same total as our assets, so our balance sheet is balanced. Remember, assets equals liabilities and stockholders' equity. So all the financial statements actually come from the adjusted trial balance. The numbers that we use come from adjusted trial balance. The exception is when you see retained earnings, you're gonna use the amount that you just calculated on your retained earnings statement, and that's going to be the only difference, really. So this is our lesson today. Do it exercise 4A is about the adjusted trial balance. Okay. The adjusted trial balance amounts here are listed. They're not listed in just any old order, right? They're listed by accounts that have debit balances are listed in this column. Accounts that have credit balances are listed in this column, right? And then this particular exercise wants you to do, it says determine the net income. I would have liked to just say determine well, just to do a income statement, because that's the proper way to do it. Now, this is interesting because this particular company was organized in April, and it only prepares quarterly statements. So it is divided into quarters in this case. Every 3 months, they'll do a statement. In this case. Should be done monthly as well as quarterly. But this company does quarterly statements. All companies do, by the way. So here we need to do the net income for the quarter. Then it wants you to determine total assets and total liabilities. I would have much rather just did a balance sheet. And here they want you to determine what retained earnings balance is. Again, I'd much rather have them assign you a retained earnings statement, because that's technically all three of those statements will give you what you need to do. So net income is the very first statement. So we're simply doing an income statement. Revenue, this company has two revenue accounts. Let's go back to our adjusted trial balance. Here you have service revenue and rent revenue. Both of these are revenue accounts. Remember, companies can have more than one type of revenue account, right? Depends on how they make money. So accordingly, that's that. And then they have all these expense accounts here as well. So we need all of those to do our income statement. Total revenue, 15 grand, which is the service revenue and the rent revenue together. Total expenses, 12,510. The difference is our profit or net income for the quarter, 2,490. Nothing to write home about, but better than the alternative. The next thing they want you to do is put together a partial balance sheet. I would much rather have just follow the order that we do in real life, which is income statement, retained earnings statement, and balance sheet, but I didn't write the book. So the assets, you have to look at that sheet. You'll know that most assets have debit balances, except you also have to include accumulated depreciation, right, which would be on the credit column because it has a credit balance. Again, accumulated depreciation is taken away from our equipment. The 14,150 is the book value of the equipment. It's these two numbers, right, that subtracted out. So cash, receivables, supplies, prepaid rent, all current assets. Equipment minus accumulated depreciation on the equipment, property, plant, equipment accounts. Total assets, 23,350. All they wanted you to do in this one, again, I didn't write it, just explaining it. Liabilities, all the liability accounts have credit balances. So you'd look in the credit column, identify your liability accounts. Notice they have an unearned rent revenue account. Right? Unearned means that they were paid up front. They owe that space for whatever period of time, the week, the month, what have you. Right? Total liabilities, 7,460. Now, if you know if your total assets are 23,350 and your total liabilities are 7,460, the difference is your stockholders' equity, right? Because assets equals liabilities plus stockholders' equity. But if you only have two of those numbers, you can solve for the third. The last thing they want you to do is to calculate the balance and retained earnings, which is the same as doing a retained earnings statement. This particular company is brand new, so they do not have any retained earnings that they started with. It starts with zero. We just calculated net income of 2490, so we add the net income. If you look back at the adjusted trial balance, they paid 600 in dividends. That's where that number comes from, the adjusted trial balance. So we subtract that out. Retained earnings at the end of the period, again, they're measuring it by the quarter. So at the end of June, 1890. So the next quarter, by the way, I think you kind of understand what that is. The next quarter, by the way, will end, let's see, July, August, September, will end September 30th. In which case, the beginning retained earnings on the next retained earnings statement, the ending retained earnings from this statement is the beginning retained earnings on the next statement. Okay. So the next statement, they would actually start retained earnings of 1890, add the profit, subtract the dividends, and get a new balance for that quarter. Okay. So whatever your retained earnings is the end of one period, it's the beginning of the next period. Okay. That is the lesson today. That's going to be a lot of homework to do. Questions?